ECB out with a warning, it's under the radar this morning. They're warning about stretched tech valuations. Is that something like the market will care about on a Friday or next Monday?
Yeah, definitely not caring about it today, but I think it's also just overdone, right? Everyone's worried about stretch valuations. And here's what I think. Go to the data. It's convenient to compare things to the dot-com days, but if you take the valuations of the top 3 stocks in the dot-com era in the S&P 500 and they're weighting, and compare it to the top 3 now, they were trading at a 62 times forward earnings versus 31 times. So if this is the bubble, it's not done inflating yet. I just don't think we're there. You're seeing tremendous earnings growth underpinning this AI trend that we didn't see during the dot-com days.
Lou, what do you make about this recent divergence? And it has been recently with Nvidia under pressure and then Alphabet taken up and off and to the right. Anything to read in there?
Yeah, I love it because I think Alphabet has been left for dead for way too long. I actually was late on Nvidia. I own both stocks and was really banging the table on Alphabet. I mean, it started the year trading at 21 times earnings. It's now at 29 times. I think it could go up to where we saw Nvidia, 33, 34 times. So I think the biggest takeaway here too, though, it's not a zero-sum game. It's not Nvidia or Alphabet's chips. It's end. Meta's going to use both. We have too much compute demand to just start switching between chips. We're not in that phase of the growth cycle yet.
Lou, I appreciate you just coming out and saying, look, I didn't buy Nvidia in 2013. I appreciate that. That's the type of candor. And we appreciate that transparency on opening bid. And as over to you, Google or Alphabet, suddenly one of the hottest stocks in the market.
Yeah, I mean, the hottest Mag 7 in the market. They are firing on all cylinders with their TPUs, with their Gemini, which has improved tremendously over the last couple of months. And then even you have Waymo, which I know that you don't talk much about, but I think that it's going to be huge.
Yeah, I don't talk about it, Nez, because I'm not getting in one of these cars. Like, I'm not there yet. I get the technology. I'm just not putting myself behind one of these things with no drivers in it.
It's going to get there, and they're way ahead of the game. It's only because we live on the East Coast, but honestly, it's going to be huge. So yeah, it's impressive. It's so impressive that Nvidia had put out sort of that statement, sort of congratulating Google on those chips. There, you see that statement on its success. It's interesting that Nvidia would sort of respond to this and also responding to the short sellers, et cetera. I think that Nvidia sees itself as the leader in the global market on the world stage. And the questions have been sort of bubbling up about competition, about the depreciation cycle, about the circular funding, et cetera. And Nvidia is now coming out to sort of respond to some of these concerns.
And as I would love to know how many layers of legal that must have went through at Nvidia to get that post out on social media. I'm going to say 40 layers. Jen, sorry to rope you into the opening bid craziness again for the second day. I appreciate it. Why would the ECB come out here and warn about tech stock valuations in the U.S.?
Yeah, and it's a little late, right? It's kind of like, haven't we been through this rodeo before? Like to your point at the top of the show, we had the Huff last week. We're already starting to come back with it now. I guess they're looking at potential financial stability risks as they look around the globe right now, and that's where they see one. But to Lou's point, I mean, you got to look at the fundamentals here and where valuations are in this run-up right now. And these companies are investing massively, but they're also printing huge profits. And this is the very early innings of AI. And so I think there's a lot of room to run here. I don't know. We'll see what happens. There's always a chance that we see a further pullback, and the ECB will say, "Okay, yeah, we called it." But at this point,
of course they would. Of course they would say that, Jen. Lou, if one is inclined, look, markets have stabilized a little bit. That's good to see. It's a holiday season. Maybe get a little Santa Claus rally. If the market is stabilized and this continues, where does one go back into the AI trade, which has been hammered? Where do you head to?
Yeah, look, I think you got to own the majors, right? You got to own Nvidia and Alphabet, but I think you got to move to solution providers, right? Start finding those companies in the healthcare space in particular that is an undervalued sector that is using and applying AI to do things that they do better. Looking at robotics, a company like Symbotic that's in the commercial side of the robotic space. I think that gets interesting while Tesla is paving the way for consumer robotics. But this AI trade, I think, as we've been saying, it's going to be here for a while. It's not just this month, this quarter. I think we're talking about multi-years. So I think you're going to be fluid and move around where you get into the actual businesses that are making money from AI, not just saying that they're doing AI.